It gives me great pleasure to bring on board Jim Rogers to talk about how should one read into the US presidential election, irrespective of who is going to be the next president of United States, what should financial markets really interpret and assume and assess from this event. Jim, fantastic to have you back. From chances of a blue wave, looks like we are in for a cliffhanger or a nail biter.
Well, the coaches, I'm delighted to see you again. It's a good day. It's a good day.
Jim, how should investors read into the importance of US presidential election?
Well, once it's passed, I will tell you what history shows, Nikuj. The history shows that if the president, if the incumbent wins, the stock market is very likely to go up the next year. The odds are very high that it will go up the next year if it has been going up. If the challenger wins, the odds are greatly reduced. It can still go up, and it often has, but the odds are much lower because when the new guy comes in, he thinks he has to clean out things that his predecessor did, and he will make a lot of changes which cause many things to suffer. So if Trump wins, history shows the market's going to go up. If the challenger wins, it's not so likely. So now you know what to do.
Jim, but
See?
irrespective of who is the boss of the White House, yes, please, you want to make a point?
No, go ahead. I was just going to say you should watch ET. You can learn everything you need to know.
Well, you should watch ET because on ET you do get to see Jim watches. That's what I always say. So every time you say you should watch ET now, I say why not? Because Jim Roger comes on ET now.
Well, I'm delighted you say that, but I will say again, I'm sure you're tired of hearing it, but the first time I went to China, I read ET, and I've loved the newspaper, and I've loved ET ever since. But go ahead.
Thank you very much. Jim, but irrespective of who the president is or who the White House new boss is, the Fed will continue to print money. The low interest rate regime will continue. And in this shape or that shape, the stimulus will see light of the day. So frankly, from a market standpoint, this may just turn out to be a no event.
Well, that's extremely good insight, extremely good point. Yes, it doesn't matter. Both the central bank in America is going to print a lot of money, continue to, and whoever is the new president is going to spend a lot of money, not just in the US. Look at Japan, look at many countries around the world. So the markets are not going to change that much just because of this election. Some people in the market will change. If Mr. Trump's friends win, they will win. If Mr. Biden's friends win, they will win. But for the most part, you're right. People are still going to print, borrow, and spend.
Jim, from a market standpoint, markets hate uncertainty. So can I say that Mr. Trump is known to the Wall Street? We know how he thinks, how he acts, when he will say, when he will not say. So from a market standpoint, given that the economy, both locally and globally, is going through a COVID repair curve, a Trump presidency is more certainty rather than a Democratic presidency because you know what Trump is.
Well, but we think we know what Biden is too. Biden's been in Washington for 47 years or something, and he's been very clear. He has said things like, I am going to raise taxes. He will certainly try to raise taxes, whether he can or not. Trump has said he will not raise taxes. So we more or less know how they stand. It's not as though these people just fell out of the sky one day. They both have been very clear, including Biden, how he feels.
What is good for markets? Raising taxes and focusing on deficit, or not raising taxes and focusing on spending and growth?
Economies never like raising taxes. It takes money out of people's pockets, which they cannot spend, and the market likes when taxes go down, and they do not like it when they go up. So the answer to your question is raising taxes has rarely, if ever, been good for a market. Likewise, economy. An economy is different from markets, as you know. The economy doesn't like it either so much when you raise taxes because there's less money to spend in the shop or the restaurants or the travel or wherever. So markets do not like. Now, the rest of the answer to your question is your children and grandchildren will like it if they raise taxes, but your children and grandchildren are, decades away. So it's really not as relevant to the current situation.
Jim, if a Republican presidency comes back, we are using if until we know the final verdict. What does that mean for world trade and China? Because Donald Trump perhaps was the first and the only president who said, look, I need to bring manufacturing back to my country, which is America. We've been doing a trade and we've been running, or America has been doing a trade and running a deficit with China, and that needs to be addressed. So he was the first one and perhaps not the only one now who has said that reduce your dependence on China. Do you think a Trump presidency is more bad news for China? Can I put it that simply?
Well, many have said it. He's the first who said it out loud and hit, 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 screamed it from the rooftops. Others say it, but nobody ever did very much like Trump did. So I would suspect that if Trump wins, he will calm down. At least he won't be shouting so much. You know, if throughout history, no matter where in the world, politicians, when things go wrong, they blame foreigners. It's very easy to blame foreigners. They have different skin, different language, different food, different dress, different everything. So it's very easy to blame foreigners. And all politicians throughout history, all over the world, blame foreigners. And that's what Trump has been doing. But Biden's been doing it too. I would suspect that if the election is finally settled and we know who won, there will not be so much reason, so much need to blame foreigners in the future, and that will calm down. That would be good for the world, by the way, as well as good for America and good for China.
Is it logical for to assume that a Democrat victory means breakdown of US tech monopoly companies, less spending on US defense, less spending on US energy, especially towards oil and gas companies?
That is what they have said. The Democrats have said that. Mr. Biden has said that over and over. They for whatever reason, they feel that the tech companies have gotten too big and have too much power. So, yes, if there's a Democrat, especially if they win the Congress, and they might, and the Senate, they might, then yes, you're going to see more attacks on tech companies, and they will try to break them up or certainly to limit them. Whether it's good or not, it doesn't matter. Nick, well, you and I need to discuss is what's going to happen. And that's what they have both said. That's what the Democrats have said. And they've also said that they're going to do more about energy. They think that energy should be curtailed more. So the Democrats are very clear about what they want.
You have been bullish on gold and silver, silver first, gold second. Irrespective of what happens today in terms of an verdict or tomorrow when we get the clear picture, are you long on that trade for next couple of years?
Oh, no, yeah, I certainly am. I don't expect to sell my gold and silver for a long time. I hope that my children have my gold and silver someday. No, everybody should own gold and silver, and I expect gold and silver to do very well in the next few years because there's going to be more turmoil, more chaos in the world economy and in governments and with currencies. No, don't sell your gold, don't sell your silver. I plan to buy more when this current correction ends. I hope I get the timing well enough.
dollar last time we spoke, Jim. You said, look, it's a stupid thing to do, but I guess compulsions are forcing you to buy dollar. Would you be looking at exiting that trade?
I still own US dollars. I have not sold any. There's no reason to. Again, once the election is done, I suspect you will see less uncertainty about the US dollar because everybody knows who wins. And I don't think either one of these candidates wants to damage the dollar. So I would suspect that the dollar trade will continue to be a good place to be. My plan, Kunich, is when the dollar gets overpriced in the next year or two or three, then I'll sell it. I hope I get my timing right.
Jim, elections aside, most of the high frequency data indicators, whether car sales in China or rural economic data in India or consumer spending in America, all of them are pointing to a very strong comeback. How come the collateral damage and the losses which balance sheets have taken, which consumers have taken, where job losses have happened, how come that is not getting reflected in any of the large sectors like retail, automobiles, even e-commerce?
Well, Coach, a lot of people are out of work. Not everybody is booming just because the governments are spending money. I live in Singapore. If you go to the airport, it's basically empty. I mean, Singapore has, I don't know, 10, 12% of the flights that it had a year ago. So not everything is hotels, travel, many things are not booming. And that's why you don't see big sales like a big retail sales like you did a year ago.
Jim, a dilemma which everybody is perhaps facing is that how does one make money or generate returns on their capital when structurally interest rates are low? In India, the fixed deposit rates, if I tell you are at about 5%, you would be shocked. But yes, 5% is low for India. Globally, you know the rates. How does one go about generating returns when interest rates and cost of borrowing have come down so much?
Now, Kunz, you watch ET now. What's wrong with you? That's how you get your returns. I mean, it's a very, very good question. Everybody, including me, has the problem. Pension plans, endowments all over the world, insurance companies and banks all over the world, people have this problem. However, I would urge people to be careful. Don't go out and start reaching for higher returns because higher returns can be more risky and you might wind up losing money. And it's better to earn very low interest rates than to lose money, even if it's small amounts of money because losing money is very, very difficult to come back from. So, yes, it's not good. It's not good for me. It's not good for anybody. But do not go out and do things that you don't understand where you're trying to get higher yield. Be careful.
Jim, the country where you live in, which is Singapore, has a lovely real estate business. You got some of the best real estate and office and residential buildings. Now that work at home has been adopted and some companies have even acknowledged it for next couple of years, how do you see the commercial real estate market moving?
Well, in Singapore, to that specifically, you're starting to see more shops close. You're starting to see, I mean, there's a big department store which has been here 150 years or something, which just closed yesterday. So this is starting to have an effect, even in Singapore. If you go to New York, you cannot imagine how many shops are closed and boarded up because people are just not going to shops anymore, either because they don't have the money or because they're buying online or for whatever reason. So that applies to Singapore. You asked specifically about Singapore. It is having an effect in Singapore. I've been coming to Singapore for 35 years or so, and I have never quite seen as many vacancies as I see now because the virus, because the economy. And I would suspect that is going to continue in commercial real estate here because people are learning about alternatives.
Jim, what if I take the history of wealth creators, 1980s, the history of wealth creators was people who had mines, oil, energy assets. Then it moved to folks who had presence in the physical retail business, or they had exposure to a software company. Now, looking at what the Ant Financial IPO could do, looks like the world is now moving towards fintech. What is your take on the way how the list of billionaires now is changing completely?
Well, Nikunj, you're exactly right. Good insight. But I would add that it's always been that way. Every 20 years or so, there's a whole new list of people making a lot of money. There's always somebody who inherits money, but the people who are making fortunes, the industries are always changing. Things like blockchain right now. I mean, blockchain is going to change everything, is changing everything we know, Nikunj. Everything. It's going to put a lot of people out of business. But electricity put a lot of people out of business too, Nakunj. But so it brought in new opportunities, and that's what's happening now. Yes, if you know a good blockchain company or individuals, you should try to get involved because it's going to change everything we know. But it's also going to put a lot of people out of business. So don't be blind. It's going to change a lot of things. A lot of banks, for instance, and insurance companies, all the back offices and all this back office processing that goes on, all of that's going to be eliminated in the next few years. I don't know what's going to happen to all these banks. There's a bank on every corner. Somebody's got to figure out what to do with all this space. Maybe they'll become old age homes. I don't know what's going to happen to them.
Jim, globally, fintech or firms like Ant Financials, which are financial platforms, are now today getting valued more than some of the old banks in US, whether it's Bank of America, Merrill Lynch, or even JP Morgan. Uh, the world telling you that the classic old-time banks are now passe? One should now focus more towards platforms like Paytm in India or Ant Financial globally.
Well, one should figure out which ones will make the transition. Some will make a transition and become successful in the future. You see what's happened. Let's use retail, for instance. Sears Roebuck was the largest retail company in America for 100 years. You probably never even heard of it. It is now basically bankrupt and gone and a mere shadow of its former self. But there's still a lot of retail in America, and maybe on Amazon or someplace else. The world is always changing, and that's what's going to happen with blockchain, artificial intelligence. Yes, some of these banks and some of these financial companies will disappear. Lehman Brothers, Bear Stearns, these are major American financial companies that went bankrupt back in 2008. But they'd been around Lehman Brothers has been around 150 years. Disappeared, but we still have lots of financial companies and lots of financial transactions. The world's always changing, and what we have to do is we have to watch ET now and figure out who is going to win and who is going to lose.
Thank you for that endorsement once again, Jim. Jim, I'm going to ask you something which perhaps is the way how Jim Rogers has invested. He does not like too much of good news because good news means he's not going to get good prices as an investor. However, Jim Rogers, the one I know and the one we know, loves bad news because that gives him an option to invest and buy stocks or assets at the bargain price. Do you think right now there is a lot of bad news in global banks and they warrant a buy and a relook?
In global banks, yes, of course there is. Some banks are unbelievably cheap. Even Chinese banks, China's been growing dramatically, but Chinese banks are cheap everywhere for many reasons because that is the past, Nikunj. Even in India, look out the window, Nikunj. You'll see lots of banks. Most of them are not going to be there in 15 years. I don't know, as I said, I don't know what they're going to be, but banking and finance is changing very, very, very quickly, and there's no reason. But, Nikunj, There are people like Ant. You mentioned Ant before. Ant didn't exist 15 years ago, and now it's a gigantic fintech company. It will happen. Some people will make the transition and they will grow and be very exciting. Others will disappear. But now, coach, I want to say again, that's the way history's been for thousands of years. India's been a very, very important country for a long, long, long time. But there have been huge changes in India in the past 2,000, 3,000 years.
Jim, you understand financial history much more than anyone else. I'm sure when you started investing that time, everybody was talking about investing only in one country, which was Japan. Then came the surge in US blue chip stocks. Then came the comeback in China. Which country do you think this decade will belong to? Because the coronavirus, in a sense, has really shaken and changed the pendulum of global growth.
Well, if one just reads the news, China has done a less bad job than anybody else. Now, Nikunj, I don't know if China's telling the truth. I don't know if America's telling the truth. I know that governments all over the world throughout history, it's they always lie. You know that. You've been a reporter for a long time. But if China's telling the truth or telling half the truth, then they have done a very good job and or less bad job. And China's probably going to come out of this even stronger than before because, and I don't know how they did it or if they did it, but you know the numbers as well as I do. Uh, China's going to come out of this much stronger. Other countries, Japan, for instance, you mentioned Japan, where Japan, has had its population declining for 10 years. The debt skyrockets every day in Japan, Nakunj, and the population goes down every year. It's a country that's got very serious problems facing it. Again, another example of change. 30 years ago, everybody wanted to own Japan. I'm telling you that 30 years from now, there's barely going to be a Japan.
Jim, if you have to, let's say, create a short position for next couple of years where every uptick according to you is going to be a chance to sell that asset company or that that particular category down, where do you think there is a bubble? Markets may not recognize it today, next week, next month, who knows, but do you think a bubble is there and the bubble is going to prick badly?
Well, there certainly is a bubble developing or has developed in American tech stocks. The FANGs, they used to be called FANGs. Uh, they never go down. They go up every day. People think Google and Amazon and Apple can never go down. Alibaba, Tencent, some companies in Asia, no, that is a bubble. However, Nakunj, I am not selling them short yet because I know about bubbles and I know that they can go on. They always go longer than people expect. They always go higher than people expect. And as I said before, if Trump wins, for instance, then we may have a blow off phase for a few weeks or a few months in the US where everything just goes higher in many countries in the world. Or even if Biden wins, we may have a blow off phase. So I'm not selling short yet because I know, Coach, I've lived through many bubbles. I've shorted bubbles. I know it can hurt to short a bubble. In the end, I've usually made money, but I also know you better wait. Uh, Wait before you short a bubble.